Welcome to Trading the Market. This is Mitchell Joseph. I'm not a financial advisor, so everything here is for educational purposes. Yeah, but let's look at Apple and let's look at like analyze it, what you could do better, you know what I mean? Or just see like what it's looking like moving forward. Let me see. Let me pull it up. Apple, we'll start there. All right, let's go to Apple. Right here. All right, so this is Apple on the daily. Let me shrink this up a bit. So Apple has been pretty bullish. You say you got calls on Apple? I think Billy has calls on Apple.
Yeah, 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 yeah,
Yeah. So it made a nice
yeah.
pullback. If you see it right here, this was Tuesday. It ran up. It had a cool down. It cooled down, but right here you see it found support. And this hammer candle right here shows me that there's buyers at this level right here. So if buyers can continue pushing up, it could come back at least test these equal highs. But it all depends on how the market moves because if the market doesn't continue to show strength, then you can't expect this to show any strength. But yeah, yeah. But if it comes down and goes to the downside for this gap fill right here, you might want to cut if it starts going the other way. You know, if it comes up down in the 158s. But right now, it's looking like buyers are in control. Let's see if that continues though. So you
Okay, cool.
yeah, yeah. And if you get any pops tomorrow and you see it starts to struggle, you could just cut it then and there. Um, but yeah, so let's talk about what's going on since I'm here. So if you guys look at the dollar, DXY. So DXY is the ticker that I use whenever I look at the dollar, right? Now I'm gonna look at it on the weekly time frame. So this is dollar on the weekly time frame, where every bar represents a week, and you'll see like the dollar dropped from the height of 114.82 way back in September, and it's been kind of free falling, and now it's kind of making a pattern right now. Anybody know what this pattern is called right here? Anybody see the pattern? Like, let me annotate. You got this big part right here, right? Then you got a left one and a right one. You guys see that head and shoulders?
Yep.
Yeah, so head and shoulders is one of my favorite patterns. Mainly because going back to basics, let me come over here. Remember, we were talking about we were talking about how do you know you're on an uptrend, right? How do you know you're in a downtrend? If your lows are getting lower and your highs are getting lower, then you're on a downtrend because the highs are getting lower, and then the lows are getting lower. So what's beautiful is that the head and shoulder forms because the stock fails to make a lower a lower low. So, so right here, so right here, for the first time, so look, the whole time lower lows, lower highs, lower lows, lower highs. But then for the first time, it starts to make lower highs. That starts to signify the reversal. But here's the thing, it's not official until you get the higher high. You guys understand that? Now you effectively have a higher low and a higher high. So one thing I was going to talk about was how to know when to cut a trade and when to stay in the trade. Yeah, so you only want to cut your position if the trend begins to change and it breaks previous lows and highs. Just like how I showed you in that past example, if it's still continuing to make lower lows and lower highs, it can just keep coming back, but it can still keep going up. It's not until it starts and then going to, it's not until it starts going, basically, let me draw it on the paper. It's not until it starts to literally, like, let's say the whole time is going like this, whole time is going like, everything's good, right? So this point right here is the last low. This point right here is the last high. So now, if the stock wants to move anyway, let's say it comes up right here, right? And then it comes down like this. Is that any reason to leave the play? You guys know?
No, it's not. It's
Why is it not a reason to leave the play yet?
it hasn't broke that area.
It's the lower low. Remember, as long as you're making I'm sorry, the higher low. So right here, this is higher low, right? Higher low, higher high. Higher low, higher high. This is a winning formula right here. Because it's healthy for stocks to pull back. It doesn't go straight up. It's not going to be smooth sailing. If you're in a stock and just shoot straight up, you know that it can shoot straight down, and it's not healthy and it's not sustainable. So now, once we break this, what are we effectively breaking right here? We're breaking the higher low. You see what I mean? So we're breaking the higher low. So now, once we break this, right? I'm not gonna say automatically get out of your position, not until you see something like this. You see what I'm saying? Because what is this right here, guys? What is this right here? What did it just make?
A lower high?
Yep, lower high. It made a lower high. So until I get both a lower low and a lower high, I can stay in the position. You know why? Because my stop loss would be underneath the lower low. You know what I mean? Underneath the lower low and lower high. So basically, from the beginning, you have to look at the structure. So number two, when you say your stop losses, you want to base it off of past structure, not just a arbitrary number. Some people like 20% stop loss, 10% stop loss, 30% stop loss. You know, people throw out different numbers, but what you have to do is look at the structure of the chart to see where does it make sense to put a stop loss. You know what I mean? Once you put it underneath that lower low, you're protected because once it crosses it, you should have been out of there. Does that make sense to you guys? So use the structure, and we're gonna go over examples. So it's not just words. And now when you do that, the other thing too, you want to have a target. So if you have a target, that will tell you that will help you know what your expectations are for the trade, and to see if you really are going towards your target or if you're struggling to get there. You know, and then you can and then what you can do is, as the trade is going your way, you can move your stop loss. As it moves up, you move your stop loss. So let's go over some actual chart examples. But but I was saying this for the head and shoulders. So yeah, so like I was saying, once we make that higher low and then we make that higher high, it became an uptrend. You should have been out of there by then. Oh, there's one more thing I want to show you guys, and I'm gonna go to the charts after this. So channel. So you got last time I showed you guys, you know, resistance zones and support zones. If you draw a box where the floor is based off the range that the stock's been moving in, and you draw a box where the ceiling is, those can be your buy zones and your sell zones. If it bounces out of that range, only if it first reacts in that range and starts going your direction, then it could be your zone, because it can always break through your zones. But the other technique, right, is you want to use channels. So channels is basically a way of boxing in the price, where the price stays in between, and that shows you the path of the stock. And the way you use it, once you find a reliable path, you know, like you see, like let's say you drew this channel, you see, okay, it bounced off, rejected off the top, bounced off the bottom, rejected off the top, bounce off the bottom. So at this point, let's say I missed all these, right? But I made a channel. Next time I see it bounce off the bottom, I know what to do. Next time I see it reject off the top, I know to sell. When it bounces off the bottom, I know to buy. As long as it starts to bounce first. Does that make sense to you guys? Any questions? 'Cause I'm going to show you guys these on the chart now. So now let's go back to the DXY.
Can't hear you.
Hold on. Oh, my fault, guys. I was muted the whole time. I didn't realize that. Thanks for telling me you didn't hear me. So you guys didn't hear what I was saying. All I was saying was when you draw the channels, they like I was showing you how to draw the channels. So you go over here, use that parallel channel tool. Let's say we want to draw a channel right here. So parallel channel. Now I'm gonna connect the lows diagonally, and I'm gonna try to like box it in with the parallel. So I'll start like right here because I can kind of see the path. So something like this, and then I can open up the channel, something like that. You guys see that? And then if I want to extend it down, I can. And then I could like move the angle around to try to fit what I need to fit. So you guys see that? The benefit of it is like when you go in a small time frame, you can really see more of how it's respecting the lines. So yeah, so this was a trade at Mara I took today. So yeah, so at first I thought it was gonna come back up here and reject from this area, but it actually triple bottom. So if you see, let me erase this. I don't need this no more. So as you can see on the orange line, this was the support. It did a triple touch. So basically, this support became a line in the sand because let me see if I can go into small time frame so you guys can see. So on the hourly, you see how that line gets respected? You guys see how that support gets respected? So until we broke this line right here, like significantly, and what you would do, you put your stop loss like a little bit underneath it. So you do something like this. A long position. You'd use this line and you would enter probably on this line. And if it comes on this line, if it bounces on this line, you could enter, and then you can put your stop loss underneath, like a little bit underneath, something like this, right? And then you could target, the green line right there. So before this happened, so like what I mean is like, okay, so because this was throughout the day. So let's say you saw this, right? Let's say you saw this. Anybody tell me what this is right here when you have anybody see the pattern? Like, know what this candlestick pattern is with these two green candles right here?
Is it a cup and handle?
No. It's just a double bottom because
Oh, double
yeah,
bottom. Okay.
double bottom. So the best candles, one of the best candle structures patterns you guys should all learn because it's one of the best reversals is double bottom and double top. Sometimes it's triple bottom, sometimes it's quadruple bottom, but when you see that multiple bottoms and multiple tops, that's a strong pattern for reversal. So let's say you're playing this and you see that, okay, we double bottomed and it went up. I missed out. I missed the move. That's okay. Because you can be like, okay, if we come back to this line, I'll re-enter. So like if you've seen this, you can set your position like this, right? Let it, and then as it's playing out, when the market comes back to that level right there, it triggered me into this trade. You see what I'm saying? And the only reason I knew to get active there is because of the double bottom. The double bottom is a strong reversal pattern. It's a strong pattern where all the buyers are at. So if I'm going to be a buyer, I'm going to go to where all the other buyers are sitting so I can sit with them so that I can participate and then basically just be in a lazy river where they just move me up. But the good thing is, like, let's say it did fail, my stop loss would be right here. And right here, you see I'm only risking 8 to make 56. That's a 7-to-1 ratio. I would take that trade all day, every day. If I can risk $8 to make 56, I'm taking that every day. Or because it's all proportional. It's like you're risking 800 to make 5,600. So that's basically how you want to trade. And like as you see, it ends up playing out, and this is what happens. So while this is happening, I hit my target. What I could do, I sell half, then I move this up. So let's say I hit this, right? I sell half, I move this up. I might target this level now as my second target based off the past structure. Remember I said base everything you do off the structure of the chart. Now I can move my stop loss to right here. So now I secured all that profit. And if the market were to reverse, I can't lose at that point. But what I could do, so then this happens, I could sell 3/4. Now I got a small position, do it again, move this up, and look for the past target over here. Look how I'm looking for the past for my target over here. And now move my stop loss and profit, where now I even have less to lose. And I don't care if it stops me out. So you guys understand that? So the problem is a lot of people get shaken out of trades. And to me, it's easier if I just make 100% on one trade, right? Than for me to try to make 10% off 10 trades. Does that make sense to you guys? Yeah, I can still do it, but it'll be less effort and more reward if I do it this way. Because it doesn't have to work out. This could have stopped me out, but I would have lost this much. And then I would have done it again to see if I can get that same risk to reward. Because eventually I'm going to win one of these trades. And if you have a 7-to-1 risk reward, you could literally lose 7 trades and win 1, and that will cover your losers. So that's the type of odds we want to play in this game. So all right, so Mara went crazy. So Mara went off, and also Wells Fargo was the other one that did his thing today. So Wells Fargo, so the banks have been beaten down. Like if you notice, like look, the banks have been beaten. But Wells Fargo is one of the banks that's starting to recover. Like a lot of the banks are starting to recover. And look, even though this is not a perfect double bottom, but diagonally speaking, you can see it as one. Like right here. Right here. You can see this, like even though it's not like a perfect double bottom, but it's not too far away from the other bottom. And the fact that it's diagonally, it looks like a double bottom diagonally. Do you guys get what I'm saying? Like diagonally, it's like a double bottom this way. So
Yes.
yeah. So it's still a double bottom, but it's not like a vertical double bottom. Some people might consider this, some people might not. But it's all subjective. The main point is that I see this trend line, I see a bottom. I know that if I see this, like basically this is what you look for. If I see this, replay. If I see this, all I'm looking for is for this to continue bouncing. So if the next day comes along and I see this, I'm already entering. Why? Because we already started to bounce off of that level. So basically, honestly, once we break this, I could already start to enter, or I could wait until we break the top of this red candle. That's another entry. You either enter, or I could enter right here off support off this line that I made. You know what I mean? So these are places that I could potentially enter the trade that's going to be a lot safer, and then this happened today. So I entered it yesterday off this break, I would have been in good profits come today. So this is a way to safely enter. And just so you know, like you guys see these candles, like what Wells Fargo only moved like $1. Yeah, like $1. But in options, I'm gonna show you what this dollar move in options is triple. This dollar move on Wells Fargo is triple, and I'm gonna show you guys. Let me go to Thinkorswim so you can see what I tested out. So this is the Thinkorswim. So right here you can see Wells Fargo. So right here. So right here is Wells Fargo, right? Wells Fargo, right? So what I did was I bought a number of contracts on demo just to test it out. So this is my demo, by the way. So right here, I bought a call and a put because you got to play both directions. So I want to see which way is gonna win. But I was leaning towards the upside, which is why I bought more calls, right? Now notice, like right here. So you see, like this is where it finished. At some point in the day, it was a little bit higher, but you see that I bought them this morning for 68. They finished the day at 100. You know what I mean? And then you see like I bought a couple other ones, and you see like this one at 86 and it finished at 122. But if you look at where it were throughout the day, you could see. Let me click on the 39 call. So Wells Fargo, I have it here. So this is the 39 call. All right. So if I go to charts and I go to 8 and go to 39 call, and you can see right here. Let me go to the day. So you can see right here, this is the premiums. This is basically the option prices. Let me erase this line. I don't need it. This is the prices of the options had you bought them throughout. So it started so these options, they started today at 67 and they went up to about 104. But yeah, I think Mara is the one that triple. Yeah, Mara. So Mara. So the other one that I tested that I just showed you the chart for was Marathon Digital, which is the crypto stock. So this one you see it I bought it today at 46. It finished the day at 120. So that one basically tripled. And I think it went up even a little bit higher. But that's the beauty of options. Just from a dollar move, you have the possibility to really gain good profits. And that's why I love options. But you got to know how to play them because these are weeklies. They only have 4 days stock expiration. So you got to know when to hold them and when to fold them. Anybody have any questions? I know I'm showing you guys a lot. No questions? All right. Go ahead.
Are you executing from active trader?
Yeah, I execute from active trader. Yeah, I do. Sometimes I don't, but it's much better when I do. It's much better executing from active trader. Do you use active trader?
Yeah.
All right, so this is active trader, y'all. So like when the market is open, you would see this, but you go active trader, you go to trade, then you go to active trader, and then this thing right here pops up. Let me make it a two frame. So this right here, this little ladder looking thing, this is active trader. So like let's say like this, there's an option loaded up right here. So right here, the gray area, that's how much it's going for. And then like literally I can sell or I can buy, but just by clicking the button. But I can't do it right now because the market is closed and I don't think this one is tradable. But that's how you can quickly execute trades, like really quickly. And then like let's say I have a watch list, I can just flip through like different options really quickly. Like link it to your watch list and I can just flip through and it'll flip through all these options on the left that I'm looking at. All right, so now let me just finish up with some plays and then that'll probably be it. So going back to the charts. So yeah, so Wells Fargo, right? So banks have been beaten up, and right now they present an opportunity that they can come back to like where they were before they got beat up. So and so now what you want to do? So this is so right here, if you notice, I have watch lists. One watch list that I have is called sectors. This watch list is where I look at all the 11 sectors of the stock market. So XLK, technology, XLF, financials. So now we're on financials. You can see this is the financials of the banks. So in my mind, I'm like, okay, there's some room that we can play into resistance. But if we can break this level, so what I would want, this is what you always want when you're looking at the charts to get the best entry is you always want it to break out and retest. So you see this level right here. So let's say Wells Fargo comes up, you wanted to come up here, then you want to come back down and retest this level. You want something like that, but you don't know if it's gonna be a little one or a big one. Like for all you know, Wells Fargo can go all the way up here and then come all the way back down, right? Or it might come up, break a little bit, then come down even a little bit deeper and retest this level. Basically, we want us to break this level and retest this level to see if we can hold that level. And then once we mount that level, then we get in and then we push off from it. So that's the break and retest. So banks present this opportunity, so I can play certain banks. So like once you see a sector is moving a certain way, you can go to any bank you know. Let's go the Bank of America. Look how this, you know what I mean? It's a little bit different, but it's still similar. You know what I mean? FRC, the bank that went down, the First Republic Bank, that was one of the banks that went down. It's presenting an opportunity. It's been beaten down so bad that it's presenting an opportunity. So if I was to play this, I put an alarm right here and say, okay, if we can break these highs, same thing, break it, and then mount on top of it, I'm entering to push it up higher. So I can just make a line right here and say if we break right here, we break through here, I want us to mount and ride this thing up higher. That, and then I got alert right there. So then I just wait to see how it reacts tomorrow, you know. And then if you see one of the top sectors is utility. Well, I won't say top, but like like right here. So right here, you see this position I put? I did this yesterday. I said if utilities I want utilities to come down. Remember, it broke the level. So what do I want? You want it to break, come back, and mount the level that it broke. Because that level was the ceiling. You want the ceiling to become the floor. The ceiling became the floor. You guys see that? So now I can potentially play this up to here. So this is the utility sector. So you can play XLU, or you can play any utility stock that you know. Like for example, ET. That's a utility stock. PCG. This is probably a better choice right here as a utility stock. So once again, if I'm going to play this, I want it to. It kind of did come down actually. It did come down right here, but I missed it. This would have been the perfect entry. Let me put a position. So now if I want to play this, I'll wait for it to come down here again, and I'll put my stop loss a little bit under this candle right here. Use this key level right here. You see I'm using the structure to put my stops, and then now my target, I can either target the top of this green, or if I see any other target, I can target that as well. But I'll just target the top of this green, you know, assume if we can get a break at this level. But as it's going up and I'm in profit, I'm going to move up my stop loss. But starting off, I'll trade like this because now I'm risking 15 to make 33. I'll take that. I'll take that risk to the profile. And then if I keep doing this, eventually when I win, it's going to pay for all my losers. Does that make sense? Anybody have any questions?
How's that compound account going?
Compound? What do you mean compound? Oh yeah, compounding. The profit is 20%. I kind of stopped doing that, but well, I stopped doing that, but I want to go back to doing that. But I only stopped doing that so I can swing something, because when I do the compound thing, I can't hold it. I can't swing. I gotta like same day get rid of it. It was going really well, and I probably should go back to it. But that's the thing about trading. Sometimes you get bored of what's working. I know. You get bored of what's working. You want to do something different, and then you realize you're better off just sticking to what's working.
Oh, you saying like basically say you started as a day trade and then you end up holding it as a swing?
Like honestly, I didn't even I purposely swung it. I did it on purpose.
Okay.
But yeah, so that's even worse. It would have been, but actually no, maybe it's not worse, because if you start off as scalping something and it becomes a day trade, that means you didn't cut it when you should have. You know what I mean? Because that's like an old joke. What do you call a scalp gone wrong? You call that a day trade. That's like a trader joke. Because you was trying to scalp and then now you end up, day trade swinging. It's just completely opposite.
You're supposed to cut your losses early.
Yep, cut it early. Take the money you have left and pivot it to something else. Because what a lot of times what happens in the market is we have our money tied up, or we suffer a loss, lowering the amount of money that we have, and then the real opportunity comes at you clear as day, and then you don't have the money to act on it. You know what I mean? Anybody?
Yeah.
So really, it's about like really being patient. Like it's about really being patient. Like not playing the market every day, being so strict that if the market does not do this, it's my way or the highway. I'm not chasing the market. The market's gonna chase me. But it's a hard mental discipline thing to do, especially if you get bored. So
Yeah, I'm looking for high probability setups mostly only now.
yeah,
That kind of
yeah, like this one, I see as a high probability setup because if we come down again and we hold this level, then I would definitely want to be in it, and that's what it comes down to, And then just SPY, oh yeah, let me go into the last thing right here on SPY. I'll show you guys. Look at what SPY did today. So right here, all right, I got 2 minutes. So what do you guys see right here? So this is what I see in the beginning of the day. You guys see that pattern again? You guys see that double bottom?
yeah.
So
Yeah.
right there, if you buy near these lows, you're good. You're pretty much good if you buy in this area because you have solid buyers defending it. That's why they made a double bottom, because they're defending that level. So now as the day plays on, look, it came down, but it never broke that double bottom. So you never had to get up. Came down, you just kind of like let it play out. And then look what it did again. Look at this. Notice it's making higher highs, higher lows. Do I have any reason to be out of this trade? No. If I got it on this double bottom, I'm good. Doesn't matter if it comes down. You can come down even lower. Doesn't matter. I know my line in the sand. And then look, you can argue right here. It made another double bottom between this one and this one. Another double bottom. You guys see that? Double bottoms are the ultimate reversals. If you guys can learn to spot these and play these, it's kind of a cheat code if you really know how to play it. And that's what happened today with SPY. All this back and forth. And yeah, so that's basically all I have for you guys today. Just letting this play out.
Yeah, SPY the last minute it took off.
Yep. And that's it for today, guys. Tap in, paid class on Wednesday.
All right. Peace.
Yep, and I see this right here. All right. Peace, y'all.
Peace.